All right, look, it's Sunday, 6/14, June 14th, 2026. Okay, we had some breaking news. I had to whip up this real quick slide and share this news with you guys and what it means for you. Okay, if you're interested in trading in the stock market, if you're interested in what's going to happen with the stock market, any type of market news, okay, this is going to impact you. So you got to watch this. Hi everybody, it's Curtis. Thank you for watching. Curtis with Wallet Real Talk. Okay, I'm thinking about changing it over to call my channel Market Real Talk. Let me know what you think about that. Okay, up in the comments. Okay. Anyways, thanks for watching. Click that like button for me. Give me a subscribe. Got any questions? Drop it into the comment section for me. Okay. We've got some breaking news. Deal done with the USA and Iran in the Middle East. Okay, the United States and Iran just agreed to a deal. Tell me if that's not breaking news enough for you and your money and your wallet, right? Anyways, it was just announced on Sunday night by our, president, and you know what? Quoted, "Let the oil flow." Okay, quote end quote. The signing is going to be on Friday, but it was already reported today, Friday, June 19th. It's supposed to be in Switzerland. The war that started February 28th is apparently over with this news. Okay, so what we're going to walk through, okay, is I'm going to give you five things here. Okay, so first, the deal reopens the Strait of Hormuz, right? What does that mean? That means number two, oil supply is going to return. It's going to replenish the world right now, which what happens, right? It's going to pull inflation down, of course. So that's number three. Lower inflation pulls um, the Treasury yields down as well, and then lower yields. What do you think that's going to do with you and when you trade your stocks? Lower yields is going to lift the AI growth stocks. Why is that? Because it changes the whole valuation on all these growth stocks because they use the Treasury yield rate as their risk-free rate when they calculate all their valuations and stuff. So lastly, okay, lower oil pushes energy stocks down, and I'm going to share some of that with you. Obviously, some of those energy companies are going to get, or their stocks are going to drop a little bit, get hurt a little bit. So, anyways, one news event, a chain of reaction going on, and I'm going to share all this with you. Again, give me a like, give me a subscribe, and let's get going here. I'm going to start right at the source, okay? The deal in one number, 20 million, 20 with a big M right there, okay? 20 million barrels of oil a day flow through the Strait of Hormuz. That's roughly one fifth of all the oil that the world uses, if you haven't heard that already, okay? During the war, that flow was shut down, obviously. The deal reopens it. So, what does that mean? Okay, so right now, right? Well, before this whole deal, okay, the United States had the naval blockade, blocking the Strait of Hormuz and everything like that. That's being lifted right now. Okay, so during that time, of course, Iran was putting all those mines. They were, not letting anybody pass without paying tolls, et cetera, et cetera. Right? At the end of the day, with this deal, okay, real supply is going to be coming back into the market and coming back full steam ahead fast. Okay, from what I had watched on the news, it's supposed to be like right now. Okay, they removed the blockade already right now. Here's why that matters. Okay, 20 million barrels a day is enough to swing the global supply demand balance. Okay, you're talking about 20 million barrels a day. Okay, 20% of the global need of oil right there opened up. Think about that. More supply means lower oil prices, lower gas prices. That's gonna make logistics, everything a lot cheaper to transport goods and stuff like that. And then ultimately, it's gonna be better for your AI growth stocks if that's what you're interested in. All right. Next slide is gonna be on inflation. So the supply comes back. What happens to inflation, right? May 2026 CPI came in at 4.2%, highest reading since April 2023. Okay, that's the CPI jump. Gasoline alone is up 40.5% year over year. That was the war premium showing up in your grocery bill, in your gas tank. And, if you were flying a lot, right? I used to fly a lot. I mean, like almost, I used to catch 4 planes a week. Okay, for such a long time, I hated it. Anyways, if you're flying, traveling for anything, vacationing, that was affecting jet fuel, your airline ticket as well. Right now, reverse all that. The deal pulls uh, oil prices down. Energy is 60% of the jump. Pull energy down, headline inflation comes down with it. So we have this economist, Moody's chief economist, Mark Zandi, expects CPI to cool back to about 3%. And cooling inflation pulls the domino effect to the next thing, which is going to be, you guessed it, Treasury yields. Inflation feeds straight into Treasury yields. The 10-year sits at about 4.5, 4.45%, right? It's been fluctuating up and down. If you're interested in investing in the stock market, or you're new into it, right? That's one of the first things you should look at every day when you pop up your app, okay? Whether it's Google Finance, Yahoo Finance, Market Watch, I don't care what it is, CNBC, right? Look at that 10-year Treasury yield, okay? Because if it's climbing up, that potentially leads to stocks coming down. If it's going down, potentially leads to stocks climbing up a little bit, okay? Just a little tip for you. All right, so anyways, per Fred at the St. Louis Fed, June 11th, this is the benchmark price of money for everything. All right? We're talking mortgages, car loans, business loans, stock valuations, all of it, okay, my friends? The yield carried the war premium. Investors demanded extra return because, of course, high oil meant sticky inflation. All right? With the deal pulling inflation down, that premium, in my opinion, has no reason to stay. So, in my opinion, you can expect the 10-year to drift from the 4.45 down towards the low fours as this whole chain reaction plays out. I don't know when, but it'll start moving down that way. And the sentiment, right? Investor sentiment, which is one of the most important forces when you're trading stocks, right? I mean, they're going to feel good about this. That's all I'm telling you. Okay, that's why I'm making this urgently on Sunday for you all, this video here. Okay, so anyways, again, I mean, I think the 10-year Treasury yield's going to drift down, okay, to the low fours, and a falling 10-year is the engine for the next move. Okay, so my expectation personally, growth stocks are gonna rally. Okay, I wouldn't be surprised tomorrow, Monday, or even pre-market opens and stuff like that. Okay, that our stocks are gonna start climbing. Okay, that's why I'm making this video right now. I'm pounding the table right now, sharing this with you guys. This leads us right here to AI stocks, okay? Could potentially gap up, but I think that's too strong of a word, gap up. It sounds more like something, really great after earnings, or an earnings call or something like that. But anyways, let's just say the AI stocks, growth stocks goes up, okay? And here's the chain so far. Okay, let me tell you, okay? The deal got done. Oil falls, inflation cools down, which leads to the yields dropping. Now watch what it does to your growth stocks, okay? Lower yields means that the discount rate, right, that the market uses to value for future earnings goes down. AI companies make the most of their money in the future as well. So when the discount rate falls, AI valuations raise and climb up a lot. Okay, that's the mechanism, and that's why, I mean, again, in my opinion, I expect things to look pretty darn good for the AI stocks tomorrow, growth stocks tomorrow. Okay, in my opinion, it's mechanical, it's not emotional. And then speaking of emotions, right, I mean, investor sentiment, they love this stuff here. So expect it to be a good day tomorrow, but we'll see. Okay, no promises, just my opinion. NVIDIA and the AI comp sit on the longest cash flow duration in the market. They get the biggest lift from a yield drop. Add risk on flows on top. with the war over, money sitting in T-bills and money sitting in gold are going to rotate back into equities as well. That's what I'm expecting to happen, okay? The growth is going to be there, and tech leads inside growth, okay? AI leads inside tech. That sets up, for stock right here, right? Not financial advice, just all my opinion, but I wanted to share this news and pound the table, share it with you all. Next up, we've got energy. So on the other side, right, we've got the energy stocks. Okay, so what does that mean? Okay, well, that means that, with energy being less scarce, right, you can expect energy to drop down. And I'm talking about the oil companies, right? I mean, you think about the large oil companies. I'm not going to name names, but there's a couple of real popular ones here, home to America, right? You can expect them to kind of go down a little bit. Take a look at the oil prices, crude on your stock app as well tomorrow. Keep an eye on that. Tell me what happens. Drop it into the comments, okay? So tell me what happens to oil in your stock apps, okay? Anyways, so we have the Strait of Hormuz reopening, roughly 20 million barrels of supply comes back into the global market, okay? We've got tons of supply coming back in now, and the price of oil will probably end up going down. That's just how economics work. It's all a chain. It's mechanical for the most part, and going back to those energy companies that I didn't mention, okay, they were earning a lot of money when crude was high. But what do you think? I mean, when $20 a barrel back in March, right? Their cash flow exploded. Their stocks went up, right? But of course, what do you think is going to happen now that the Strait of Hormuz is opened up after the deal? Okay, so anyways, you just run that in reverse, essentially. Ever the as the supply normalizes, um, again, our energy companies we're making are going to shrink, and that's again, I mean, I think it's the energy sector is going to be repriced. That's how things work with this type of situation. So keep an eye out for that. Again, right, the deal done. The oil supply returns back to the globe. Oil price falls. Inflation calms down because of course, legit for getting your good. And then what happens is the Treasury yields drop, hopefully, and AI growth stocks, stuff like that, they're gonna like it. They're gonna jump up. They're gonna climb up and things like that. And then of course the energy companies are gonna, their stocks, that sector is gonna drop a little bit. So that's just my take on this. Okay, on the market reaction. That's my report, my opinion. But tell me what ends up happening. Okay, drop it into the comments. If you got any questions too, drop it into the comments. That's it for me. That's all I got for you guys. Hey, if you like this video, give me a thumbs up. Click on that subscribe button. I plan to make a whole lot more video. I just got started a couple weeks ago, right? And I'm getting into the groove of this right here. So I'm loving it. And I'm loving you all watching as well. If you got anything for me, drop it into the comments. I will see you guys again next time. It's Curtis. It was a urgent breaking news. I had to make this video real quickly. So whipped up these slides real quickly for you all. I'm excited to see you guys next time. So, hey, make it a great evening, okay?